हेलो स्टूडेंट्स, वेलकम टू सागर शर्मा क्लासेस। आज हम आपके लेके आए एक इम्पोर्टेंट टॉपिक, मीनिंग एंड सोर्सेज ऑफ लॉन्ग टर्म कैपिटल। फाइनेंशियल मैनेजमेंट का एक टॉपिक है। इसमें लॉन्ग टर्म कैपिटल, जब आप अपना कैपिटल स्ट्रक्चर बनाते हो तो कौन कौन से उसमें आपको सोर्सेज लॉन्ग टर्म कैपिटल के देखने को मिलते हैं, ये हम डिस्कस करेंगे। सबसे पहले बेसिकली कैपिटल क्या होता है। तो कैपिटल सिंपल भाषा में जो भी आप स्टार्टिंग में अपना पैसा इन्वेस्ट करते हो किसी बिजनेस में, डेट इज कैपिटल। Capital refers to any financial resources or assets owned by a business that are useful in furthering development and generating income. In other sense, it refers to fund raised to support a business or project. So capital needs can be of different types. It can be short term, it can be medium term, and it can be also long term needs. Short term basically working capital needs, here less than 1 year or equals to 1 year. Medium term is 1 to 5 years, and long term is more than 5 years. Basically fixed assets needs are in the long term needs. Okay, after that, what are the sources of long term capital? So there is famous source, equity share capital. First one is equity share capital are the real owners of a company. You already know there are two types of shares, equity as well as preference share. So there are various ways by which an organization can raise the fund by the equity share capital. First one is IPO, initial public offering, a process of offering shares of a company to general public. Offer for sale, selling of a share to an issuing house which bear risk of selling shares to other investors. Third one is private placement, a process of selling shares to investment institutions, financial institutions, and large private clients. And next one is right issue. Right issue is a process of offering share to only existing shareholders, employees, or any person authorized by a special resolution. Next one is bonus shares. Bonus for shares is also known as flowing back of profits. Basically, these are the retained earnings. These are issued out of free reserve, security premium account, and capital redemption reserve. Third one is preference share capital is also a long-term source of capital, in which preference share get the two privileges which the equity shareholders cannot get. First one is they will receive the amount first in case of wound up of the company, and they get a fixed rate of dividend. Now the say last one is, to loan from banks and financial institutions can also be a source of long-term capital. Debentures and bonds of different types, redeemable debentures, secured, convertible debentures, callable and puttable debentures, zero coupon bonds also. And build operate transfer, a type of project financing wherein a private entity receives a franchise to finance, construct, operate, maintain, and transfer after a specific period as long for 20 to 30 years, like toll plaza. These are built operate transfer. And the next one is build lease transfer, also called a lease financing. In this, control of project is transferred from the owner to lessee for a specific period, like the operating lease. So this is built lease transfer. And the next one is bridge finance. Bridge finance is a loan taken by a company, normally from commercial bank, for short period because of pending disbursement of loans sanctioned by financial institutions. Next one is venture capital financing. It refers to financing a new high-risky potential venture promoted by the qualified entrepreneurs who lack experience and fund to give shape to their ideas. Like if uh, if I want to raise the venture capital finance, so my idea of project should be unique, and this can be in the various ways: equity financing, conditional loan, participating debentures, as well as income note. Equity financing, long-term source of finance up to 49% of total equity capital. Conditional loan, repayable in the form of royalty on sales like 2% or 15% after the venture is able to generate sales. Participating debentures, on these no interest is charged in startup stage, low rate of interest in growth stage, and high rate of interest in maturity stage. Income note is a hybrid security which combines feature of conventional and conditional loan. Entrepreneur pays both interest and royalty on sale, but at substantially low rates. So these are wait. Next one is debt securitization. Debt securitization is a process by which a company makes pool of its financial assets from a consolidated financial instrument which is issued to investors. This is the process of debt securitization. First one is origination, after that pooling, after that securitization, creation of mortgage-backed security. Now the next one is GDR. GDR is Global Depository Receipt. It is issued by depository, usually a large international bank in a global market, against share issued by an Indian firm. and ADR is issued by US depository in US against share issued by an Indian firm. And the external commercial borrowing, a foreign currency loan, you can availed by Indian corporates and PSUs from non-resident lenders at low rate of interest. And last one is foreign currency convertible bond, FCCB, masala bond, low interest rate bond issued in foreign currency abroad. So these are your sources of long-term capital. If you have any doubt, you can ask in the comment section. Thank you.